Welcome to the Theo video for January 14th, 2016. I'm Jeff White, and if you call yourself a trader, you're most likely asking yourself, was that it? I mean, did I see what I think I might have seen today? You know the word. It's the C word in the markets. It's got 5 syllables. It rhymes with capitulation. Yes, that's the one. It's capitulation. That magical description of that unsustainable selling pressure. It's the way to describe everyone running for the exits. And yes, it can be the biggest deciding factor for perhaps a bit more of a lasting turn in a stock, or in this case, the broad market. So, today we saw perhaps a little bit of that taking place. If you look here at the Nasdaq, we saw our 5th straight opening gap to the upside get pounded. Okay, the gap was filled again. We moved lower on the day. We set a new correction low here in the Nasdaq, as well as the other indices. But even the Nasdaq and the Russell, both during the day, had moved lower to the tune of about 1%. And that doesn't sound like a real nasty decline in itself. But hey, I mean, after you get smacked around the way that this market has been lately, every little bit counts. So there was definitely some pain taking place out there. If you look at the VIX, I mean, the VIX itself really didn't exactly spike higher today. It didn't really produce that big ramp. I mean, it nudged past 26, but there was no big sudden boost in volatility. The price action in the broad market had definitely intensified. Stocks finally kind of got short-term sold out, though, and then we ripped higher off the intraday low during the course of today's session. And when I say ripped, I mean it. If you take a look here, the lower portion of this window is the NQ. This is the Nasdaq futures. And this really is the part of the day that I'm referring to here. Right back here, the low was set at 41.24. And this move right here, this bounce off that low, that first bar was basically a 20-point bar off the low to the high. These are 2-minute bars. And moving into that initial bounce high, we saw the Nasdaq futures tack on roughly 2.8% over the course of this little move right here. So it doesn't look like it's a whole lot, but let me tell you, this was a move right here to the tune of 2.8%. So big, sharp, sudden move off the low. And from there, we did pull back a little bit over the course of maybe the next hour or so, but there was really no kind of sudden selling pressure. I mean, we backed off a little bit, and it was a pretty quiet fashion that we kind of sold off. There was no real knee-jerk kind of scream to the downside. We didn't threaten to fall apart here. And then from there, we just kind of got some steady buying pressure that kind of progressed throughout the remainder of the day's session. And so, all in all, it really was an important potential turnaround. It's not to say that everything is all clear, but even though we backed off a little bit here late in the day into the closing bell, the reversal overall, it made its mark, and we ended the day solidly higher. Even after having filled another opening gap and having moved into new correction low territory, the waters were most definitely tested on the downside. We pull up here the Nasdaq or the S&P charts, and we had kind of come back down into some key areas here and ultimately finished the day higher. And for the Nasdaq, it was to the tune of 2%. So I mean, that's a significant move. But does that in itself, does that mean that we've got the all clear to just step on the accelerator and buy this and buy that and buy our initials and expect it all to move higher? Well, no. It doesn't mean that. I mean, nothing in the market is a given. But this bounce does look a little bit different than the previous bounce attempt that we saw even earlier this week. You say, well, hey, I mean, a couple of days ago, we did the same thing. We reversed course intraday, and it didn't really stick. What's different this time? Well, let's take a look here at the S&P 500. The S&P on Monday session, this is a red candle because we closed beneath where we opened, but on the day this was a net gain. So we're gonna talk about that in a moment, but there's a couple of real keys that stand out to me for the S&P as having potential to be notable with today's rebound in price compared to what we saw happen on Monday and even into Tuesday. So for one, we got much closer to this multi-month low set back in August, which happens to be at 1867. We got well inside of 1% from that today at the low of the session. We were down here at 1878 and change. So that low was threatened. It wasn't tagged. I mean, look, there's 500 stocks in this index. So it's not going to be an exact price, but overall, we did approach that, and we were able to kind of ramp from there. And that's definitely positive. Another thing is that today's net change was significantly greater than it was on Monday. So on Monday, we did reach a new correction low. You can see that this bar was kind of the lowest low we had reached for a number of weeks. And after that, we did reverse and turn higher on the day. We closed green on the day, and it even closed on that particular day at 1923, the same way it did today. It closed at the exact same area today. So, but the difference is after that turnaround attempt on Monday, it had finished the day higher by a whopping $1.64. So it's hardly impressive. Today, the SPX finished higher by more than 30 points. So it was a much different day in that regard as well. So, look, tomorrow it's a new day. We could unwind all of this upside from today. It's definitely not out of the question, but, evaluating the action as it unfolds, which is all we can do as traders, we've got a couple of different elements about today's rebound that just might allow us to get a little bit of follow through for a few days. And really, that's kind of all we're looking for here initially. It's not like someone's trying to go out there, especially not me. I'm not going out there trying to declare this to be a multi-month low and we're just going to turn and rocket higher from here. That's not at all what I look for as a trader. I want to look for something that may open the door in the near term to a potential turnaround, and we've got a couple of elements about today's move that may allow that. Okay, we've got a long weekend ahead of us with the markets being closed for MLK Day on Monday, and maybe over the weekend the appetite for risk improves a little bit. I mean, maybe there's a little bit more willingness to put some cash to work instead of raising it the way that we have throughout the progression of this decline. But it may not all be smooth sailing, so don't necessarily expect that. I mean, ultimately, you look back here, and there are a lot of trapped traders back in here that throughout the course of this decline, they're trapped, and they missed their stop on the way down. And I don't mean stop loss order. I'm talking about the bus stopped and gave them opportunities to get off, and they didn't take it. And so they're going to likely be viewing any bounce back up as an opportunity to kind of unwind some of those positions and lighten up or, exit those losing trades at what really is going to be a better than worst case scenario, the way that they were facing right down here at today's low in the morning. So, be aware of that. Just understand that dynamic may be in play over the coming days. We could absolutely lift further on the heels of today's turnaround, but just stay real nimble if you're trading on the long side, because once this initial rebound runs its course, however far it carries, however long it lasts, once it runs its course and it kind of begins to run low on fuel, I mean, we could encounter some additional selling as traders at higher levels start to sense that second chance to unload. All right. Thank you for joining us here at TheoTrade. Stop by the chat room if you're trading in tomorrow's session, and otherwise enjoy your Friday.